Hello, the Trading Guide here. Today I want to show you how to find better entries for your trading using a multi-time frame approach. It's a short one, we can explain it using a simple example. Here we are on the EURUSD on the 1 hour time frame. We have the 20 and the 50 EMA added to the chart and you see this is a strong downtrend. Then price is consolidating and here we find a level of support. We can mark this using a rectangle. Price is respecting this level, but it is also respecting the 20 and then at least the 50 EMA. So my assumption is that it is going to break this level and continues to go down. The lower bound of the level I keep to the lowest closing price. And before this level is broken, we have some hints of the price. We have bearish engulfing candles here and one here. But I wouldn't enter here because it is too risky. I want to see the price really breaking this zone. And then we see the break, a huge bearish candle. Of course we could enter now at the close of this candle and set the stop loss, for example, to a previous high, like that. And now let's assume that we waited for this large bearish candle to close. And yes, this is a pretty nice trade with a risk to reward ratio of 1:2. That's okay, but we can do way better than that when we are entering at a better price. And for this purpose, I go to a lower time frame. Okay, this is a replay, so we can go back in time. So go back to this candle to simulate that the breakout hasn't happened yet, and then I remove this short position. Okay, now I mark the stop loss that I saw on the 1 hour time frame. Like that, and then I switch to a time frame that is 4 times lower than the current time frame. In my case, this is the 15 minutes. Okay, here we are. We can still see the stop loss of the 1 hour time frame that we defined with the white line, and now wait for the price to close below the zone. So go forward in the replay, and here we have the first candle that is again closing inside of the rectangle, and so I wait, if it would be a real trade, for the next candle to close. And here it is, a nice bearish candle closing below the zone. So I take the trade at the closing price and the stop loss as we defined in the 1 hour time frame. Okay, now if this would be a real trade, I would switch to the 1 hour time frame again and then wait and see. Okay, so let's assume that we just hold the trade to the first bearish candle here, this one. Then we would already end up with a 3-hour trade. But the take profit that we defined in the original trade, we set to the next bearish candle. So let's wait for this one. Here we go, and now look at the ratio. This is a ratio of about 1 to 4.5. So we are risking here 150 with one lot, and the profit is about $700. So the thing is, we don't wait for the candle to close on the 1 hour time frame, we switch to a lower time frame so that we can enter at a better price, because we have the confirmation of a candle closing below the zone that we defined. So guys, I hope it was understandable how you could increase your profits using a multi-time frame approach. If you still have any questions, then add these to the comments below. Follow me on Twitter and subscribe to this channel. Also hit that notification bell to be notified when new tutorials are available. And I'll see you in the next one here on the Trading Guide.